Hi everyone and welcome to StockEducation.com's video on the basics of the stock market. Whether you're a complete beginner or looking to refresh your knowledge, this video will cover the essentials you need to know to get started with confidence. Let's dive right in. In this video, we'll break down the essentials of the stock market. We'll start with the basics, what are stocks, followed by an overview of different types of stock exchanges. Then we'll explore why stock prices move and where you can access key information to make informed decisions. Next, we'll dive into the role of investors, how to buy stocks, and the importance of market makers in keeping the market liquid. Stay tuned as we guide you through the world of investing. So what exactly are stocks? Stocks represent ownership in a company. When you buy a share, you own a small part of that business. Companies issue stocks to raise money for expansion, operations, or other needs. For example, if you own one share of Apple, you're a part owner of the company. This entitles you to a share of its profits, which might come through dividends or the stock's price increasing over time. Stocks are bought and sold on stock exchanges. There are two main types. Primary market, this is where companies issue new shares through initial public offerings, IPOs. For instance, when Tesla went public, it issued shares in the primary market. Secondary market, this is where existing shares are traded among investors, such as on the New York Stock Exchange or NASDAQ. For example, today you can freely buy and sell Tesla shares in the secondary market. Stock prices move because of supply and demand, but what drives that? Three key factors include company performance. Strong earnings often push stock prices higher, while poor results can bring them down. Economic news, interest rate changes, or employment figures can influence the overall market. Market sentiment, optimism, or fear among investors also impacts stock movements. For instance, when a company announces record profits, its stock price typically rises as demand for its shares increases. To make informed decisions, you need reliable information. Here are a few trusted sources. Financial news websites like CNBC, Bloomberg, and Yahoo Finance are great for staying updated. Company filings, annual reports like the 10K provide a deep dive into a company's performance. Broker platforms, many brokers offer stock analysis tools and research reports. For example, reviewing Apple's annual 10K report can provide insights into its revenue, challenges, and future plans. As an investor, your role is to allocate your capital wisely. Here's how you can do that. Research stocks, analyze companies and industries. Build a portfolio, diversify your investments to balance risk and reward. Monitor investments, regularly review your portfolio, and make adjustments when necessary. For example, a beginner investor might start with a mix of index funds and blue-chip stocks for stability and growth. Now, how do you buy stocks? Follow these steps. Choose a brokerage. Platforms like Robinhood, Fidelity, or Schwab are beginner-friendly. Fund your account, deposit money to start investing. Search for stocks. Look up the ticker symbol of the company you're interested in. Place an order. Choose between a market order, buys immediately, or a limit order, buys at a set price. For example, if you want to buy Amazon stock, you'd search for its ticker symbol, AMZN, and place your order. Now let's talk more about market and limit orders. A market order is executed immediately at the current price, while a limit order specifies a maximum or minimum price. For example, if Apple stock is trading at $150 and you place a market order, it's executed at that price. But if you set a limit order at $145, the order will only execute if the stock drops to $145 or below. Thank you for watching StockEducation.com's video on the basics of the stock market. We covered what stocks are, how exchanges work, why prices move, and how you can start investing. Remember, knowledge is your best investment tool. If you found this video helpful, don't forget to like, subscribe, and share. Thanks for watching, and I'll see you in the next video.